Welcome everybody to this week's Eagles Nest podcast. I'm Vincent Devall with Eagle Homes.
I'm Brad Brewer, also with Eagle Homes. And today we have a guest. We'll let him introduce himself. There's three of us. We're tight here today.
I know. I got to move over a little bit so I don't have a big pole in the middle of my face. But hey, guys, thank you for having me. It's a pleasure to be here.
I wonder if we could fix that real quick.
I'm sure we could. Let's turn it this way and then turn that way.
No, it's the pole. It's the pole.
It's the pole. We got to leave it there.
Yeah,
That's all right. I can do a little south side lean. It's no big deal.
That's okay. My wife never cuddles with me, Kevin. Just get closer.
Huh.
Just kidding.
I learned something new today.
Andrea, I didn't know what I was stepping into there.
Andrea,
but, all right.
she knows.
I'll share your motives to have Kevin on the call.
She knows I'm kidding.
So this week, we brought a lender on, Kevin here. Kevin, tell us a little bit about yourself. Where are you from? What brought you here? To the podcast, obviously.
Yeah, well, so my name's Kevin McSwain. I'm a mortgage loan officer. I kind of brand myself as the mortgage guy. My license plates say the mortgage guy. I've been in the business for, 20 years. And I've joined Guaranteed Rate about a year ago. I've been in the business for a really long time and just opened up my own branch office here in Burlington.
Nice. So where in Burlington are you located?
400 North Pine Street in historical, beautiful downtown Burlington.
I love how it's got like a friggin' radio recorder sound to that. 400. It's North Pine Street.
I've been practicing my voice since I was invited to come on here.
I love it.
We'll give it a shot.
I love it.
We'll even give you a point of reference. It's right on the corner of, and with formerly they've moved into their new space. Thriving Financial occupied your space. So a point of reference for the locals.
I took that over right across the street from Flippies.
Nice. Have you had Flippies yet?
Of course. Duh.
Good food. Good food.
It's kind of dangerous being right across the street, quite honestly.
Very dangerous. You just have to add to your workout. It's all right.
So, Kevin, you said you've been in the business for 20 plus years. What took you to Guaranteed Rate?
Yeah. So, at my previous place, I just wanted to kind of grow and being able to join, quite honestly, the behemoth that is Guaranteed Rate, a top 3 mortgage lender in the country. Being able to lend in more than just Wisconsin. So I'm licensed in Illinois as well. Bigger, better platform, can say yes more often than say no, from what my past used to be.
That's awesome. So you said you can lend in Illinois. Are you restricted in Illinois? Can you do all of Illinois? You just restricted like some of the northern counties? What's your reach to Illinois?
The southern tip, anywhere in the state. So once you have the state license, it's anywhere.
Awesome. And so, tell us with Guaranteed Rate, what are some of your favorite, let's talk first time home buyers or those people that are really trying to buy a house this year and tired of, paying 100% interest on their rent to their landlord. I can't complain. I'm a landlord. So what the heck?
That's been kind of like the magic question the last probably 12 months or all the time, right? When is the right time to buy? And the right time to buy is whenever you're ready. You don't have to have 20% down, which is a huge myth that a lot of first-time buyers think. You can get in with as little as 3% down. There's new programs out all the time. Recently, we find out that Guaranteed Rate is one of only 10% of lenders across the country that have a specific first-time buyer program that 90% of other lenders are not even offering. So you don't need to have 20% down. You don't have to have perfect credit. And I work with anybody.
So that buyer program, I mean, when you say you don't have to have perfect credit, what are we looking at? Like 400s?
Well, 400 is going to be a little bit too low, but for a conventional loan, the minimum is 620. Okay. You don't have to have an 800 score. You don't have to have a 740. So 620 is the minimum credit score for a conventional loan, and FHA is going to go down to a 580 credit score.
Okay. And, FHA, are those rates a little bit better than conventional right now, or are we kind of starting to level off? I know, 6 months ago, FHA was a little bit lower than our conventionals. Where are we at in comparison with those?
It really depends on the day, quite honestly. Yeah. I mean, it's been quite the roller coaster. So, I'll quote someone a rate and it could be different 4 hours from now, depending on what happens with the market and the jobs report and the Fed meeting and all that kind of stuff. So, the key with this is really working with a professional that knows the market. And, as much as we try and plug into all those types of things, surprises come out of left field, from a global marketplace all the time.
Yeah. I think we saw low rates on Thursday and then they jump back up on Friday. It was ridiculous. But yeah,
and that was the jobs report, right? So everybody thinks, hey, the Fed's meeting on Wednesday, they raised the federal funds rate. I guess the rates are going to go up, and they did just the opposite. They came down. And then the jobs report came out on Friday, which is good. There was a awesome jobs report.
Right.
That's not what the government's trying to do. They're trying to slow the economy down. So a strong jobs report is not having the recession that we're expecting. And when the recession comes, then rates will drop. Historically, that's what happens.
Yeah, historically, yeah. Everyone thinks recession and rates are going to go up, but historically, recession and rates drop. So that's a good thing for a little bit of a good thing. I guess it has its pros and cons.
Right.
So,
couple quick questions on the loan program. So you guys pretty much do every loan program. We talked FHA, we said conventional. What about like WIDA, USDA?
Yeah,
VA?
they're quite honestly, there's really nothing that I can't do. We have a phenomenal VA program. I've earned the VA badge or VA expert badge, whatever that means. It just means that I know what I'm doing, quite honestly. So I do a ton of VA loans. At guaranteed rate, we waive the lender fees on VA loans. So that's going to be a savings of $1,400 for our veterans. A lot of misconceptions about VA loans as well. I love talking about VA loans. You don't need to have any money down. You don't pay PMI, but it also doesn't mean that that's not a strong buyer. I have one right now that has an 800 credit score, plenty of money in the bank, but he can use his VA benefit to his advantage and is financially in his best interest. So we're hooked up with the VA. I can get their certificate of eligibility. I handle all of that stuff behind the scenes for a seamless transaction.
That's awesome. And, tie into that VA. I'll tie in two plugs for you here, Kevin. One plug and one thing that, the misconception, a lot of veterans, especially those ones that maybe used a VA loan 10, 15 years ago, the VA loan, the new norm is that you can use it more than once, correct?
Oh yeah. You can use it multiple times.
Yep.
And you can actually have more than one VA loan open at the same time, as long as you don't reach your capacity on what your eligibility is.
Gotcha. Yeah, that was a huge misconception. Everyone thought, well, I can only take out one VA loan, or I can only use it once. That's not the truth. And here's the plug for you, Kevin. For those that don't know, Kevin and I are both members of the Homes for Heroes, which allows us to give back to veterans, educators, healthcare workers, fire department, police department, armed services. So it's a great program for people that are looking to buy or sell, to where we're able to give back to them. For Kevin, I don't know, yours is before closing, mine's post closing, right? What's that look like for you guys?
Yeah, so the Homes for Heroes program is something that I'm really, really proud to be a part of. I was ecstatic when I found out that you were involved in it as well, because it truly is a give back to our local heroes. So not only veterans, and that's what a lot of people think is Homes for Heroes. It's for veterans, right?
Right.
Firefighters, emergency medical service, law enforcement, and that doesn't have to be just a police officer. You could be a corrections officer, things like that. Teachers, healthcare professionals, which is a massive field, right? So from a lender standpoint, we give a discount, a credit towards their closing costs. And I've also assembled a team along with you. So we have, I have a home inspector that's going to give a discount on their home inspection. I've got an insurance agent that will give a discount on their home and auto insurance, and a title company that's going to give them a credit at closing as well. So every step of the home buying process, those heroes are going to be saving money.
Yeah, that's awesome. Yeah. I mean, any way we can help them save money, it's, the buying process is not only scary, but it's costly, right? So any way we can help them save money or get money back post closing, is a great platform. So, yeah.
You had mentioned, Kevin, something about, the 800 credit score, that's the VA loan, very good financial situation. You have any tips for buyers? We as agents try to present that buyer that's getting a loan with just as competitive as, say, the cash offers. It's so tough to do sometimes. Is there anything that you would recommend that the buyers do or us agents do to show that, hey, this buyer is just as strong? I mean,
yeah, first and foremost, you mean for a VA buyer?
Yeah. VA, FHA even, or whatever.
One of the things that I always put out there, a service that I want to do, and there might be other loan officers that do this. But if you're putting in an offer, you're working with a buyer and you need me to make a phone call to that listing agent to just give that reassurance. Not all pre-approval letters are the same. Mine are. I'm going to verify income. I'm going to verify assets. So not only are you confident working with that buyer, they're confident as they're out home shopping, that they know where they're going to be financially so they can shop with confidence. And making sure that you are pre-approved before you go shopping. I run into situations like that all the time, and had a kind of a not so good one this weekend. Customers' credit reports were frozen. So they were out looking, ready to write an offer on their perfect home, had multiple offers on the table. That's when they decided to contact me at 4:00 on Saturday. The mortgage guy's ready to jump for my customers whenever they need me, and credit was frozen, and I could not provide that pre-approval letter.
What, that's a new one to me, Kevin. What is your credit's frozen?
So borrowers have, consumers can contact the 3 credit bureaus, TransUnion, Experian, and Equifax, and they can put a freeze on their credit report just so nobody else pulls it. It's just kind of a security measure so people can't do that.
Okay.
And there's just a process to go through that. So when you're going to apply for a loan, you have to remember to unfreeze your credit.
Yeah.
Well, if someone did that 2 years ago and hasn't applied for any credit, it's out of sight, out of mind.
Right.
And now the emergency comes because they didn't get pre-approved on Wednesday, Thursday, or Friday before they went out shopping on the weekend. And that brings a little bit of a challenge to the table.
So I did not know that. So that's a great thing to be able to freeze your ability to on your credit. I guess my question is then what, so you don't run into a situation like that. What's the time frame to make, you have to make a call? What's the process to unfreeze?
Yeah, so there's phone calls. You can also go on to the 3 bureaus website. So in order to freeze them, you're going to have some kind of an account with them. They might I haven't done it personally. I've never froze my credit, but it might just be as easy as going on, logging into your account. There might be like through Credit Karma or some of the other credit agency reporting agencies out there. They might have the ability to do that. So it might just be simply clicking a button, but there's a process to that and a timeline involved in that. And it doesn't always meet the timeline that we need to be able to make it happen.
Right.
Good to know. Good to know. I wanted to give you another plug too, real quick. Speaking of Saturday, he's not lying. My particular instance, this is how far Kevin will go. I called, had a client. We need to get an offer in by 4:00 on a Saturday. He's actually on his way to go spend some time with family. Totally necessary. And he calls one of his colleagues who I get a call back within 15 minutes, which is pretty cool. So talk about service level. I'll give you guys a great plug on that.
Thank you. Being available when you need me. Everybody has family time. Everybody has a life outside of the work, but I need to be available when my clients need me, and that's not a 9 to 5. Even though I'm in the financial industry, it's not a 9 to 5 gig for me.
Right. And with today's technology, you can do everything, remotely. You don't have to be sitting at a desk or in an office. You can do it travel and whatnot. Kevin, you made a comment about using like CreditWise, things like that. What is a good platform for buyers to use to kind of get an idea of where their credit's at and what that looks like? That's going to be, it's going to kind of give them I would say, an honest opinion of where they're at today. What's a good platform to use?
Yeah, that's a good question. I don't know if I have a real good answer for that, quite honestly. Credit Karma is probably the most well-known name out there. But it's not uncommon for someone to tell me what their score was, whether it's Credit Karma or through they have a credit card with, you name the bank or credit union. And a lot of those now have, a FICO score review. The mortgage credit score is going to be different than what they get through any of those sources.
Okay.
And a lot of those will only pull one credit report, where any mortgage lender has to do all 3. It's called a tri-merge, and the middle of those scores is used. So it's not uncommon for those scores that a mortgage lender gets compared to what someone gets on their own.
Gotcha.
But it is a good way to monitor, like you can see what's on your credit report. And even though the score may not be the same, but you can see kind of what's out there.
Right. Yeah. You can get an idea if you have a missed bill or a missed payment or something like that. Or, if you have you forgot that you had a doctor's bill from 10 years ago and it's only $19. Heck, get that paid off, because no one, you don't want that sitting on there.
Yeah. The surprises always end up coming. I hate to be the bearer of that news. Like, hey, did you know this was on there? And they're like, no.
Right. Yeah. No, I mean, a great example is we were condo shopping a couple weeks ago, and we found out there was something on our credit score that kind of dinged us a little bit, and had no idea it was there, and kind of hurt a little bit. But yeah.
Well, and that just kind of goes to the point of making sure that you are pre-approved. I mean, I know it's shouted from the rooftops from everyone all the time, but there's reasons to do that, and not when you're like, I need to find a house tomorrow.
Right.
if you give yourself a little bit of time, if maybe you're aware that maybe there was something that happened in the past, maybe we can take care of those things now. And if you don't qualify now for any reason, it's not a no, it's just a not yet.
Yep.
And there are ways to help people that have maybe gone through some credit challenges. I have a credit repair team that will work with people, and maybe they end up, being in a better position 4 months from now or 6 months from now, depending on maybe what has happened in the past to clear up. But there are ways. It's not a no forever if you don't qualify right now.
Can you go into that a little bit more? Because we've got some clients out there, and you always do, that are going through that credit repair or just trying to beef up their credit. Maybe it's not even that it was bad necessarily, but just needs a little bit of boost. Is your team in-house that you said that works with them, or
yeah, I mean, I've partnered with a team because, I can't be an expert at everything, right? So,
Sure.
What I like to do is partner myself with industry professionals and call on them when needed. So really it's a super warm handoff. There are a lot of agencies out there in my 20 years. There's some that aren't any good. And there's some that really just take people's money, and 2 years later, they're out a ton of money and their credit hasn't changed. So I really seek out, I believe that if I'm going to give a referral to someone, I want to make sure that they're vetted.
Good.
So it's going to be a good reflection on me and actually do what we need them to do, which the goal is to get them someone into homeownership.
Right. What, go ahead.
No, I was just going to say it's an excellent point, because I've had clients come to me and they knew it, and they're like, well, I'm working with a company right now. And I basically would say, have you vetted that company? Did you get referred to them? Because I would really recommend, whatever lender you're going through, talk to that company that they work with, because they've used them multiple times. They're going to know whether they know what they're doing, because a lot of times, and they'll tell you, I know sometimes that when you start fixing it, it actually hurts it a little worse. And then you get that jump. I've had several tell me that, but I would go through your lender. That way they know these companies that are reputable.
Definitely. And the one that I work with, so they'll give me a monthly report back. Nice. So, hey, here's where we're at with so-and-so. I had that call last week on a client, where they were able to delete and actually remove a couple of old things that were still hurting them. Some things can't get done. There's a lot of things that those agencies, because they're just relentless with trying to do that individuals really can't accomplish that on their own, at least not in the timeline.
Right.
It's writing letters, it's following up on things. And I don't have time for that, right? I mean, everyone else you're working. So trying to do all that stuff on your own. There are some things that you can do on your own to increase your credit score, but getting things removed or fixed, that's a challenge.
Yeah. When you talk about doing things to improve your credit score, what would you say are, the top 2, 3, 4 things that you would recommend to a buyer so that they can improve their credit score?
Number one that I see all the time is credit card balances in comparison to what your credit limit is.
Okay.
So it's not how much you owe, it's what's called a debt utilization ratio. So if you have a $500 credit limit and a $400 balance, you're using 90% of your credit.
Right.
Where if you have that same $400 balance on a $2,000 limit, it's not the amount, it's not the $400 that you owe, it's the percentage. So you really want your credit card balances to be less than 30% of what that credit limit is.
Okay.
Sometimes, as long as you don't have late payment history, sometimes it's as easy as just calling your credit card company and getting a higher credit limit. Sometimes that's possible. And now suddenly your score goes up, even though you didn't pay off your credit card.
Gotcha. With that, can someone request that credit increase, and does it hurt their credit score?
Generally not, no,
Okay.
Because, if you already have an existing relationship with Chase or Citibank or Discover or Capital One, whatever it is, they'll probably want to do some kind of a soft pull on your credit, even if it's a hard inquiry. Typically not if you're already an existing customer with them. Obviously, they're all going to have their own policies with that. They may want to just make sure that you're not behind or in debt on a bunch of other things that's besides with theirs. They may want to just make sure that your income and you're employed. But it's not like it's a full new thing. And then you're not opening up a new trade line as well. So when you open up a brand new credit, that will have an initial hit to your credit.
That's something the bureaus, from what I understand, in the last couple of years changed to where that's one of the higher movers of your credit score, is that balance on the revolving credit lines, like the credit cards. In fact, I learned it too. Like I use my Discover card for everything throughout the month. So the balance gets up there and I pay it off. And another lender I talked to is like, she's like, when does it come out, everyone? When's the new bill? She's like, that's when it hits your credit report. So she's like, make sure your balance is as low as possible, not on your due date, but on that date. And I'm like, oh, that makes a lot of sense.
That's exactly it, because all those creditors are going to report to the credit agencies once per month. And that's what the statement is. So even if it's one of those things, right? I use one as well for all the monthly expenses, right? Gas and groceries, and I pay it off every month. But whatever that balance is on the statement is what gets reported to the credit report.
Right. Right. Yeah. I tell buyers, when they're starting to work on their credit and stuff like that is, every 2 weeks, if you get paid every 2 weeks, pay your credit card off. Like, why wait till the end of the month and have to pay, it's a lot easier to pay $250 than it is $500, right? Pay it off every 2 weeks when you get paid. That way you kind of are on the same budget, and do the same thing. Only put gas on your credit card. If you're trying to build that up, only put gas on there for a while until you get used to paying that, because that's a necessity. You need that to get to and from work. Pay that off and then start building from there. So yeah, no, some great tips. Going back to some of the programs that you currently work with, and what's one of your favorite programs out there right now, Kevin?
Oh gosh. How much time do we have?
Yeah, we got about 15 minutes.
Honestly, I just like helping people get into a home, right? So I don't have a favorite program. It doesn't matter to me whether someone, if whatever makes financial sense, right? Most of the time, a conventional loan is the route to go, because it's going to be the easiest way to get your offer accepted. But if there's a better program, if FHA makes more sense or VA makes more sense financially, my job is to make sure that I'm providing options. Right. And whatever's going to make the most sense and also help you get your offer accepted. Right. So there are times that maybe we need to go with a conventional loan, even if it may be a little bit higher cost because of the market. We are in a competitive market. Yep. And there's multiple buyers on every home typically. And you still need to be in a position to get your offer accepted. And that's where I come in, is to just, here's what the options are. And let the customer choose what's going to make the most sense for them, not only financially, but also to get their offer accepted so they can own a home.
That kind of goes into another question I have. A lot of lenders, and I don't know how you do it or not, will 99.9% of the time tell somebody what they're qualified for. So, you pull their credit, you look at their income, their assets, and they go, hey, Brad, you can buy a $300,000 house. But what you don't tell Brad is that $300,000 house is going to cost him $2,500 a month in principal and interest, not including his tax or his insurance. We ran into this, Thursday or Friday?
Yeah, just last week.
Yeah. And so, when you talk to a potential buyer or client, do you ask them, hey, what would you like your monthly payments to be, and then work it backwards for them? Or how's that work?
100% of the time.
Okay.
Absolutely. Good. Because it's like you said, it doesn't matter what a lender tells you qualify for. If you qualify for 500,000, but don't want a payment more than $1,800, then I'm not going to have them wasting their time looking at $400,000 houses.
Right.
And sometimes people just don't realize that, especially if you haven't owned a home before, or you go to some mortgage calculator online that doesn't take into account property taxes or homeowners insurance or PMI, yep, those types of things. So that is one of the questions that is 100% of the time of, tell me a little bit about what you're looking for price range, and tell me what your payment goal is. I don't want to spend their money. They know what their budget is. Yep. But I also want to provide flexibility as well. So sometimes people will change what their goal is, right? Always the answer is like, well, as low as possible, right? Of course, we want our payment to be as low as possible, but we also want to help you get the home that's going to meet your needs.
Right. Yep. Yeah. And I think that's where Brad and I come in too. And they go, yeah, I want to buy a $300,000 home. And I first look at the taxes and go, well, you realize that the taxes are $6,000 and you're going to be paying $500 a month in taxes. And they're like, oh, okay. Well,
I walk my clients through that all the time at the beginning. It's what I call, providing a better buyer. So not only for them, but for you as an agent as well. So as they're out house hunting, they're shopping with confidence. I put together payment examples. So you'll see, here's where your payment would be at 250, 260, 270, 280, 290, whatever the price range is. They'll see what their payments are, including taxes. We'll have a conversation about what realistic property taxes are in the area that they want to live. They're going to see what PMI is. We're going to estimate homeowners insurance, and they're going to get a breakdown of all the cash that they need to close besides just their down payment. What are closing costs? What are all the third-party costs involved? What's an appraisal? All of those types of things are broken down. So my clients are going to be out there shopping with knowing what their payments are going to be roughly, how much money they're going to need to close. And now it makes your job more effective as a realtor to show them houses that's going to work for them.
Yeah.
It's a great point. So, I mean, for those out there that are on the consumer side, so a great question just to ask yourself, and then a great lender like Kevin's going to tell you is just ask yourself, okay, what am I comfortable with? Not what purchase price can I afford? So that's,
I want to help someone.
question.
I want to help someone buy a house, not just get them a loan, and there's a different mentality and approach to that. Because it doesn't matter to me what their payments are. I don't care if someone buys a $150,000 home or a $500,000 home. It doesn't matter to me. I want to help them get what they can with flexibility to make their home ownership goals a reality.
So you're trying not to make them house poor. Is that what you're trying to say?
Exactly. Nobody wants to be house poor.
What when we talk about closing costs, everyone thinks, oh, I need 3.5% down, or I need 20% down, whatever that looks like. What are some of the other costs that are associated? I know you talked about, there's the appraisal, there's the title, what are those costs? And if someone's looking at a house, let's say they start off looking at a $250,000 house, and they go down to a $200,000 house. Is there a percentage that they can say, okay, closing costs are going to cost me about 1% of my total, or,
No, because those closing costs are more fixed. So it's not a percentage. So,
Okay.
The cost of an appraisal is the cost of an appraisal, unless it's, a $1 million property, or a lake property or something very unique.
Right.
But that's going to be a constant regardless of whether the price of the home is 200 or 400. Title fees, closing fees, those types of things, they're all constant. They're going to vary a little bit from company to company. But overall, it doesn't matter what the price or the value of the home is.
Gotcha. Awesome. So go ahead, Brad.
Well, I was just going to say, we got about 3 minutes left here.
Oh.
Do you have any more mortgage or finance questions?
I don't. We can go.
Let's go fun.
All right, let's go fun.
So Kevin, I don't know how well you met Vince before me. This is the first time meeting Kevin face to face. So everybody that knows Vince and I know we have basically only one hobby. It's golf. So that's what we love to do. So if I have any spare moments, I'm either practicing golf, putting in my house, swinging clubs in the garage, outside, wherever, chipping in the yard, or on the golf course. So what do you do in your downtime?
Wow, that's a great question. Well, I do like to golf, but golfing doesn't like me, so I'm not very good. So I tend to be trying to find my ball in the woods or the weeds or somewhere. So I don't get out nearly as much as I probably should.
Kevin, I'm going to tell you right now, golf doesn't like any of us some days.
So, I'm a man of faith. So I do a lot of stuff in volunteering at church.
Okay.
I'm involved in a lot of different ministries as well, Bible studies. So helping people, with their spiritual journey as well is a big part of my life.
I'm spiritual on the golf course.
There is a lot of praying involved.
There
on
really
the
is.
driving range as well.
Please let me clear that pond.
So Kevin, I know you mentioned earlier today you had dinner with your wife and your mother-in-law yesterday. What else, wife, any extended family, where are you from locally? Are you from this area, or what brought you to Burlington?
Born and raised in Greendale, Wisconsin.
Okay.
So a Southeast Wisconsin guy my whole life. I went to college at UW Parkside in Kenosha.
Yeah.
I live in Waterford. And what brought me to Burlington, quite honestly, was just the opportunity I've been looking for a chance to open up my own branch office. And I'm in Burlington all the time. And I was finally just able to secure a location for an office. So that's what brought me here. And I love the area.
Yeah. So if you could pick your favorite lunch spot right here in Burlington, where is it? And we're not going to throw any.
You already said they're great. So you already said Flippies. So you have to go outside of Flippies. That's across the street.
Oh
Come on now.
You're really going to put me on the spot.
Yeah,
here.
put you on the spot.
I try and eat healthy during the day because I don't eat healthy at night. So, a lot of times I'll bring my own lunch or snack and, some fruits and vegetables. Got to put
Come on, Kevin. You
once in a
can't
while.
say bring your own lunch. Come on, put you on the hot spot.
So I've been trying to sample some different places, and I don't know all the names. So you're going to have to forgive me, but there's a Mexican restaurant like almost right across the street.
Super Taco Moy's.
There you go. So the tacos there are phenomenal.
Yep.
and the oh my gosh, the name. Sometimes like when a name just blows out of your mind.
Oh,
I
yeah,
can't think of it.
Just describe it. I'm a chubby kid. Come on, I'll figure it out.
The Italian restaurant that's right down on Pine Street.
Napoli's or
Napoli's.
Zampano's.
Napoli's.
Both, by the way, are delicious.
Yep, I've had Zampano's pizza, and I had a chicken parmesan sandwich from Napoli's. That
One
was
of my favorites.
Just like,
It's my father-in-law's favorite.
oh my God,
Oh.
I couldn't even finish it. I'm like, I didn't know the chicken breasts were that big.
If you got a hearty appetite for lunch, and I'm a lover of calzones. Not everybody even eats them. Napoli says by far the best calzone I've ever had. So shout out Vincenzo and family. You guys rock.
Before we're done, can I give a plug for an event that I'm doing?
Oh,
Absolutely.
of course, yeah.
Go.
Okay, awesome. So we talked about Homes for Heroes.
Yep.
So on Thursday, February 16th, I have partnered with Cravings Premium Beverages, and I'm gonna be there from 8 o'clock in the morning until 10 o'clock in the morning, and free coffee, free bakery for any first responders that can come in, whether they're on duty or off duty. Come on in for coffee and bakery at Cravings on 2/16.
2/16.
February 16th.
That's
February
awesome.
16th. All right, that's good to know. We'll make sure we throw that in the Facebook post as well. And Kevin, I see you're a fan of beer. So what's your favorite beer? You've been traveling. I see Runaway and Low Daily on your list every once in a while. So,
yeah,
throw a plug there too.
The microbrews, I there's not a favorite. So I'm a fan of porters and stouts. Those are my two favorite.
Okay. A little bit darker.
Beverages.
I like it.
Yeah, I like those. And I just like to try different ones. So I haven't really had one that's disappointed me.
Yeah.
The peanut butter stouts that are out there, or the peanut butter porters. I
Not
like
bad.
that kind of stuff.
There we go.
So yeah, it's I always like going to either one of those, Low Daily or the Runaway, because it's always something good.
On those chocolate or coffee based ones. Oh, they're so good.
Yep.
Is it?
It's gonna be
What's
close.
today? 5 more days.
5 more days.
Yeah. So that by the way is referenced Vince and I in our 40-day forge. We have 5 days left after today.
Saturday's our last day.
Saturday's the last day. So we've been alcohol free for 40 days. We've both stayed true.
Yep. It's been pretty strong.
It's been no beers, no bourbon, no wine.
Super Bowl Sunday.
Super Bowl
Tell my
Sunday.
wife next Monday's podcast, I might be a little red-eyed and hungover. We'll see. Guys, so this is a little bit after 9:30. We're gonna wrap this up. I'm Vince Devall with Eagle Homes.
I'm Brad Brewer, also with Eagle Homes. And thanks again for
Kevin McSwain with Guaranteed Rate.
Thanks
for joining
everyone.
us.
Have a great week.